Welcome back to another Wealth Code video, guys. Like, subscribe and comment if you want to see more of our great videos. Have you ever wondered how people make money through the stock market? Think of the S&P 500 like a giant basket filled with the 500 biggest and most influential companies in the United States. It's like buying a mixed bag of your favorite candies instead of a single flavor. This index represents companies from various sectors, such as technology, healthcare, and finance, showcasing their overall performance. When you invest in the S&P 500, you're not just picking one company, you're diversifying your investment across hundreds, which reduces your risk. Much like enjoying assorted candies means you won't be disappointed if one flavor is bad. Many people choose this index because it has a history of growth over time, meaning that although there are ups and downs in the short term, the overall trend tends to increase. So, if you want to invest and let your money grow steadily, the S&P 500 can be a smart option to consider. But how exactly do you buy into this index? Let's break it down step by step so that anyone can understand how to start investing. Before you can buy into the S&P 500, you need the right tools, much like you can't bake a cake without a mixing bowl. The essential first step is opening an investment account, which is like your kitchen for financial creativity. There are two main types of accounts: brokerage accounts and retirement accounts. A brokerage account is similar to a general-purpose kitchen. You can use it whenever you want to whip up something delicious, like stocks or ETFs. On the other hand, retirement accounts, such as an IRA, are like a cake you've set aside to eat later. They're meant for long-term savings and often come with tax advantages. Research various brokerage firms to find one that fits your needs, like shopping for the best kitchen gadget. Compare fees, services, and user experiences. Once you find a firm you're comfortable with, it's time to open your account. This process typically involves providing personal information, just like filling out a recipe card. After your account is set up, you'll be ready to start your investing journey. Now that you have your investment account, you need to understand what you're actually buying. It's like knowing the ingredients in your dish. The S&P 500 can be purchased through two common investment vehicles: ETFs and index funds. Picture an ETF, or exchange-traded fund, as a ready-made sandwich. You can buy it easily, just like grabbing a lunch off the shelf. It trades like a stock throughout the day, so you can get it right when you want it. Alternatively, an index fund is like a meal prep you set up once a week. You invest in it at the end of the trading day, allowing you to buy in at a set price. Both options track the S&P 500's performance, meaning they grow or shrink based on the index. The key difference is in how you trade them and often the fees involved. While ETFs might have lower fees, index funds may be more accessible if you're new to investing. It's crucial to choose the right product based on your goals and comfort level, just like picking the right meal for your health. Once you decide between an ETF and an index fund to invest in the S&P 500, it's time to set your budget. Think of budgeting like planning a road trip. You need to know how much gas you can buy to determine how far you can go. Start by reviewing your finances. Calculate your income, monthly expenses, and how much you can allocate for investment without affecting your everyday needs. Financial experts recommend setting aside funds that you won't need for at least 5 years to allow your investment to grow. Just like saving for a big vacation that takes time to plan. Once you've figured out a figure you're comfortable with, it's helpful to establish what percentage of your savings you want to invest. Generally, starting small is wise, so you can get a feel for how investing works. Rather than investing all at once, consider dollar cost averaging, which means investing a fixed amount regularly. This method reduces the impact of market fluctuations, like filling your gas tank gradually instead of all at once. Planning your budget is key to making investing work for you. Now, it's time to place your order and buy your S&P 500 investment. This process is like ordering food online. First, log into your investment account. You'll find a search bar where you can type in the name of the ETF or index fund you want, like searching for your favorite pizza place. Once you find it, you'll see price details and performance history. This information also helps you understand what you're about to eat financially. Decide how many shares you want to buy. You can usually purchase fractions of shares, which is like ordering half a pizza if you don't want a whole one. Choose the type of order. A market order means you'll buy at the current price, while a limit order lets you set a price you're willing to pay, similar to waiting for a sale at your favorite store. After reviewing your order, hit Buy. And just like that, you've placed your order. Congratulations! Soon, you'll be part of the S&P 500 family, watching your investment grow over time. After making your purchase, it's essential to keep an eye on your investment. Think of monitoring your S&P 500 investment like checking in on your garden. At first, you planted seeds, but you need to water and nurture them to grow. You can use your brokerage account to track your investment performance regularly. Most platforms offer tools and insights, like colorful graphs showing how your funds are flourishing or struggling. However, it's important to avoid obsessing over daily fluctuations. The stock market is like weather. It's unpredictable and can change rapidly. Instead, focus on long-term trends, which will give you a better picture of your investment's performance. There is a common saying, time in the market beats timing the market. This implies that staying invested through market ups and downs tends to yield better results over time. So, check in occasionally, make adjustments as necessary, and remember that persistence is essential. Just as plants can take time to grow, your investments also need time and care. Knowing when to sell your investment is just as vital as making the initial purchase. Imagine deciding to pull carrots from a garden after planting them. You don't want to pull them too soon, or they might not grow fully. Similarly, you should be clear on your goals for investing in the S&P 500. Are you in it for the long haul, saving for retirement, or does a specific milestone trigger your desire to sell? An effective approach might involve setting a target price. If your investment grows significantly, you can consider selling part of it, making room for reinvestment, or taking profits, much like enjoying a slice of that carrot pie you've been waiting for after a good harvest. If the market experiences a downturn, remember, it's often best to resist the urge to sell out of panic, as markets can bounce back over time. Finally, regularly assess your investment goals and adjust them based on your changing circumstances. Just like you adjust recipes for taste, monitoring how your needs evolve helps inform when to sell effectively. To maximize your investment potential, consider exploring different strategies and diversification. Think of your investments as a well-balanced meal. Having a variety ensures you get all the nutrients without relying on just one flavor. While investing in the S&P 500 is a solid choice, it's worth examining other asset classes, like bonds or international stocks. This approach can help balance your risk and reward. One common strategy is to follow the buy and hold philosophy. This means purchasing an asset and keeping it for an extended period to capitalize on market growth. similar to slow cooking a stew for maximum flavor. Periodically, review your investment mix to ensure you're still aligned with your financial goals. For example, during market downturns, you might find certain investments are performing better, indicating a need for adjustment. Utilizing automatic contributions can also help build your portfolio over time without excessive effort, like setting up a coffee subscription service. Just sit back and watch as values accumulate. Being proactive and knowledgeable is crucial to effectively navigating your investment journey. Now that you have a better understanding of how to buy into the S&P 500, you're ready to embark on your investment journey. This process involves multiple steps, from opening an investment account to placing your order and monitoring your growth, much like nurturing a garden that flourishes with time and care. Remember, the key is to stay patient and think long-term, as investing isn't a get-rich-quick scheme, but a powerful tool for building wealth over time. Don't hesitate to seek guidance from financial professionals, read articles, or watch more videos to enhance your knowledge. The more informed you are, the better decisions you'll make, like knowing which plants thrive in your garden. Consider sharing what you've learned with friends and family to inspire them on their financial journeys too. If you're excited to start investing in the S&P 500 and grow your financial future, take that first step today. Remember, the journey is just as important as the destination, so go ahead and dig in. For more videos from Wealth Code, don't forget to like and subscribe.